Welcome back to Squawk Box on CNBC. We're just seconds away from some new PCE inflation data, as well as personal income and spending numbers. The futures right now have been right around here all morning long. They're kind of anchored there by the good report from Nike, and that Dow component is sharply higher. Rick Santelli is standing by at the CME in Chicago. No hitter recently. Rick, the numbers, please.
The numbers, please. On personal income, of course, and spending, we're waiting May data. Don't see it on the wires yet, but just to give you a brief glimpse, we're expecting income to be down and spending to be okay. Income down 2%. That's actually better than the down 2.5%. And why do we expect that? Well, of course, the pop from the stimulus checks the last round is fading a bit. And on the spending side, it is unchanged. A bit of a disappointment. We're looking for a number closer to up 0.5%. And we all know the spending is changing gears a little bit, maybe moving away from what was during maybe worst parts of COVID, kind of autos, furniture, electronics, moving more to, beauty. We're all in public again, healthcare, clothing, restaurants. And if we look at the deflator, and this is important, a month-over-month deflator is down 0.4%. That is much bigger than the down 0.1 we were looking at. But last month went from minus 0.1 to up 0.3. You need to kind of look at those together. If you look at year-over-year deflator, 3.9 exactly as expected. Now, if we look at the core, and this is important, the core, month-over-month, ex-food and energy, it is up 0.5. That is less than the 0.6 we're expecting, and that is moving a bit lower because we had 0.7 last month, although revisions trickle in late these days. And year-over-year deflator, personal consumption expenditure deflator, and this is probably what number everybody is looking at and anticipating the most, up 3.4 exactly as expected. But do remember, the last time we were at 3.4, you're looking at the early 90s, so it has been a while. And whether this is sticking or whether it's transient or not, listen, there's very good arguments that it's going to be transient. But if the chapter lasts 2, 3, or 4 years, is it transient or is it just a chapter of inflation? And the markets are going to have to grapple with that, like the Fed. Bank of Mexico, along with many emerging markets, have started to snug rates up a bit. They moved up from 4 to 4.25. But if you look at the biggest central banks in the world, they're snoozing during the whole episode.
Shepard Smith here. Thanks for watching CNBC on YouTube.